Why did August suck so much?
There's a very good shot that we make it to our bull case of 230.
It's a 90% chance of no hike and a 10% chance of a 25 basis point hike.
I think by year end, we'll still end up at 4,600.
How much of this bond move is a threat?
This is seasonal and is what you should expect in the month of August. And I have a million charts that back that up. And I'm not ready to move away from that argument. If things get materially worse, I may be forced to rethink that. I do not think that this is about all of a sudden there's going to be this renewed push for a ton of new rate hikes. And in fact, most people, you ask them what's going on in the market this month, why did August suck so much? They'll tell you, oh, well, the odds of the rate increase are substantially higher. No, they actually aren't. Actually, it's a 90% chance of no hike and a 10% chance of a 25 basis point hike. And that would be okay. I don't think that that is a huge difference. Now, we do have some positioning stuff going on. And a lot of the macro people will tell you, look at yields all over the world. They're higher. Okay, it's a steepening. It's what you should have. If GDP now forecasts are to be believed, we're going to have another quarter of strong growth. Why wouldn't we have more steepening? So for me, that's enough. One area of concern, and I'd love to get Belski's take, maybe 7.25 is too high for 30-year mortgages. Like maybe that's where things get real. And the sell-off in home builders yesterday was probably the proximate cause for that was probably that mortgage number. Maybe that's where I have the most concern. How much higher can that go before something gets hurt? But other than that, I'm just not seeing what other people are seeing. And I think this is a textbook August doldrum kind of pullweback.
August is always something going on. And remember, last year was very, very volatile heading into September. And so we're not surprised to see this weekend. We've been talking, this weakness, we've been talking about this for quite some time. And you talk about the home builders, Josh. I mean, I think people forget that home builders actually were one of the best performing industries after tech. So this could simply be some profit taking, number one. But number two, that 7% number on mortgages does freak some people out. But remember, also from a supply standpoint, you got a lot of supply coming in the home builders. So I think that's an area that you want to start with these types of reactions on stocks that have been outperforming, Scott. You want to try to make a list of some of these things to bottom fish a little bit in September. I'm actually more worried that 45.50 might be too low because I think the way earnings are coming in, Scott. So the way that earnings are tracking, I think there's a very good shot that we make it to our bull case of 230, and I think that could ultimately buoy stocks higher in October, November, December. Remember, September, we're more back to normal than we have been the last few years. And September's conference season. We're going out and visiting companies. We're talking to companies. This has been the bottoms-up stock picking type market this year, and this is all about fundamental stock picking. So I do think we're going to see some sort of a rebound and really strong fourth quarter, which actually get us closer to the 50-50. But if China is actually going to be really slowing like everybody thinks it is, then the Fed may have to think the opposite direction, number one. Number two, remember, emerging markets in China did very well last year. So this could also be part of the unwind on that side. But there's no doubt that there's massive fundamental and macro issues in China that we've been avoiding.
You coined the phrase bond vigilantes. Are the vigilantes back?
I think they are. They're certainly saddling up. Usually the bond market is driven by inflation expectations, and what everybody expects the Fed to do about inflation. Usually supply and demand really don't matter that much. And that's usually because federal deficits tend to widen during recessions when the Fed's lowering interest rates. This time around, we've got the federal deficit widening when the economy is doing well, and I think the bond vigilantes are quite concerned about that, way too much supply.
How much of this bond move is a threat, a headwind to your bullish equity call, Ed?
Well, look, I thought we would end up the year at 4,600 on the S&P 500. We got there at the end of July, and I decided not to raise my forecast. So I'm looking for the market to either move sideways or continue with this pullback, maybe even down to the 200-day moving average, and concerns about what the bond markets, bond vigilantes are going to do. But then I think by year end, we'll still end up around 4,600. Next year, I'm looking for 5,400, but I think in the short term here, it's why the market has been down since really the end of July.